Hello everyone, and welcome back to the channel. Today, we're diving deep into a major market mover, the US Dollar Index, or DXY. It's been a fascinating day as the dollar has softened, dipping below the key 98.50 level. Why is this happening? All eyes are on one thing, the upcoming US Nonfarm Payrolls report, commonly known as the NFP. This is a huge piece of economic data, and it's set to be released later today. So, what exactly is the NFP, and why does it have such a massive impact on the dollar? Essentially, it's a report card on the health of the US job market. It tells us how many new jobs were created or lost in the economy, outside of the farming sector. This data gives us crucial clues about the overall strength of the US economy, and importantly, what the Federal Reserve might do next with interest rates. Let's break down the two main scenarios that could play out. First, what if the NFP report comes in weaker than expected? This would suggest that the US labor market is starting to slow down. If fewer jobs are being created, it signals that the economy might be cooling off. For the Federal Reserve, this could be a green light to start cutting interest rates. Why? Because lower rates can stimulate the economy by making it cheaper for businesses and consumers to borrow money. If the market starts to believe that rate cuts are coming soon, this typically undermines the US dollar. A currency's value is often tied to its interest rate. Higher rates attract foreign investment, boosting the currency's demand. Conversely, the prospect of lower rates makes holding that currency less attractive, causing its value to fall. So, a weak NFP number could push the dollar index even lower. Now let's flip the coin and consider the second scenario. What if the NFP report surprises everyone and comes in stronger than expected? A robust jobs number would paint a picture of a resilient and healthy US economy. This would challenge the narrative that the Fed needs to rush into cutting rates. In fact, it might suggest the Fed has room to keep rates where they are for a bit longer to ensure inflation is fully under control. A stronger than expected outcome would likely provide some immediate support for the greenback. Traders who were betting against the dollar might have to quickly reverse their positions. This could cause a short-term rally, pushing the US dollar index back up against its rivals like the euro, yen, and pound. In summary, we're at a critical juncture. The market is holding its breath, waiting for this NFP data. It's a classic tug-of-war between bullish and bearish sentiment for the dollar. Will we see signs of a slowing labor market, reinforcing expectations of Fed rate cuts and sending the dollar down? Or will a strong report defy expectations and give the dollar a much-needed boost? We'll find out very soon. Make sure you resubscribed so you don't miss our update after the numbers are out. Thanks for watching.